Ladies and gentlemen, good day and welcome to Jyoti CNC Automation Q1FY27 earnings conference call hosted by Anand Rathi. Before we begin, a brief disclaimer. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and it may involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aniket Jain from Anand Rathi. Thank you and over to you, sir.
Thank you. Good evening, everyone. On behalf of Anand Rathi, I welcome you all to Q1 FY27 earnings conference call of Jyoti CNC Automation Ltd. We are pleased to have with us management represented by Mr. Parakram Singh Jadeja, Chairman and Managing Director. We will have opening remarks from the management followed by a question and answer session. Thank you and over to you, sir.
Thank you, Aniket. Good evening. Good evening, everyone, and a warm welcome to our Q1 FY27 earnings conference call. Along with me, I have a senior management team and SGA, our investor relation advisor. Results and presentation have been uploaded on the stock exchange. I hope everyone has had a chance to go through the same. I'll begin my opening remarks with an overview of the economy, followed by industry and company's operational and financial performance. The global economy witnessed a challenging FY26 with the geopolitical tensions creating uncertainty across markets for significant part of the year. The conflict in the Middle East disturbed global supply chain and energy markets, leading the volatility in crude oil price, raw material cost and inflation. These developments have created an uncertain operating environment for businesses across the industries. FY27 has begun on a relatively stronger footing. Geopolitical tension in the Middle East have moderated with greater restraint being shown by all countries. While the outlook has improved, the global environment continues to remain sensitive and any fresh geopolitical or trade-related disruptions can once again impact global supply chains, commodity prices and cross-border trade. In today's interconnected world, no economy remains insulated from global events. India to witness the impact of higher crude oil prices and supply chain disruption during the past year. At the same time, these events have reinforced the importance of building the resilient and self-reliant manufacturing ecosystems. While India has traditionally been recognized as a service-led economy, there is now a clear policy focus on strengthening a domestic manufacturing as a long-term driver of economic growth, employment generation and global competitiveness. The government of India continues to accelerate the country's manufacturing ambition through initiatives such as Make in India, the PLI schemes. Higher infrastructure spending and the development of industrial corridor sector-specific policies are also driving investment across key industries, including PLI, incentives for mobile and electronics manufacturing, increased private participation in the space sector, continuous focus on defense indigenization, and policy support for automotive industry through EV and advanced manufacturing initiatives. Together, these measures are strengthening India's manufacturing ecosystem, attracting investments and reinforcing the country's position as a preferred global manufacturing hub. As a company, we are closely aligned with this structural growth opportunity. Our businesses is a direct reflection of manufacturing activity across the country. As our CNC machines enables customer to expand capacity, improve productivity, and manufacture with greater precision. Speaking about the machine tool industry, the global market today is estimated around $85 to 90 billion. China remains the largest consumer of machine tools, followed by the United States, reflecting the scale of their manufacturing ecosystems. India's machine tool market, while currently estimated at around $4 billion, as it an inflection point, as manufacturing investments accelerate across the sectors. We believe the domestic market has potential to grow multiple times over the next decade. Despite this opportunity, India continues to depend heavily on imports, with nearly 60% of domestic machine tool demand being met through imports, primarily from Japan, Europe, and South Korea. This presents a significant opportunity for import substitution, as Indian manufacturers increasingly look for reliable, technological advance, and locally supported solutions. Domestic machine tool companies are well positioned to capture larger share of this market while contributing to India's vision of becoming a global manufacturing powerhouse. Coming to the key updates during the quarter for standalone businesses. During the quarter, for Jyoti in India, we continue to witness a strong demand from general engineering, automotive, EMS, defense, and other precision engineering sectors. This reflects increasing capital expenditure by manufacturers, rising localization initiatives, and continued investment in expanding domestic manufacturing capabilities. The demand environment remains encouraging, with customers increasingly looking to automate operations, improve productivity, and enhance manufacturing precision. We recently launched a new product, NX, a high-precision double-column machine. The product is targeted to cater primarily to a railway sector, along with the commercial vehicles, infra, power, and heavy engineering. These type of machines was largely imported previously, and we are confident we will receive encouraging response from our customers. India demand is reflected in our standalone performance. Q1FY27 revenues witnessed a robust growth of 37% to 107 crores compared to same period last year. The profitability front as well, at Q1 FY27, EBITDA adjusted for forex losses stood at 145 crores compared to 99 crores in Q1 FY26, with margin of 28.4%, an increase of 190 basis points. Reported EBITDA stood at rupees 137 crores with margin of 27.2%. Q1 PAT stood at 88 crores, growing by 21% over same period previous year, with margin standing at 17.2%. Speaking of the global our operation at Huron, globally, demand continues to be led by the defense, aerospace, and general engineering. As customers globally continue to invest in advancing their defense and manufacturing capabilities. We believe the long-term demand outlook for high technology CNC machines remains robust. Speaking about operation at Huron, I'm pleased to share that all operations are running smoothly and are in swing. There have been no disruption to order intake, project execution, or overall operations Huron facility, reflecting the resilience of our team and process. We are also witnessing steady improvement on across industry sectors. We are also witnessing a steadily improving demand environment across multiple industry sectors, which gives us confidence in healthy order inflow over the coming quarters. Based on current market trends and the customer engagement, we remain optimistic about building a strong order book for Huron. Huron continued to be a key pillar of the company's long-term growth strategy. Its advanced technological capabilities, strong engineering expertise, and established global presence significantly enhance our ability to serve customers worldwide. As we continue to leverage Huron's strength, it will play a critical role in expanding our global reach, accelerating innovation, and delivering world-class CNC machine solutions to customers across diverse industries. Our financial front at consolidated basis. Revenue for Q1FY27 stood at 508.5 crore compared to rupees 410.2 crores in Q1FY26, a growth of 24%. The Concall number also include rupees 35 crores in revenue from Jyoti CNC to Huron, which get netted off in consolidation. Further, the Q1FY27 and QIFY26 are not strictly comparable as in Huron. We have moved away from our accounting method, which led to lower revenue recognition in Q1FY27 as compared to Q1FY26, at which time we are following a percentage completion method on a certain terms and conditions. On a like-to-like basis, our consolidated revenue should have been higher by more than 30 crores. Q1FY27 adjusted EBITDA stood at 119 crores compared to 100 crores. Adjustment was in account on unrealized forex losses to the tune of rupees 10 crores. Adjusted EBITDA margin stood at 23.4%. Reported EBITDA stood at 109 crores with margin of 21.4%. Q1 PAT stood 57 crore in a margin standing at 11.2%. Overall, both our standalone and consolidated businesses continue to benefit from a healthy demand environment. Historically, the first quarter has been seasonally a softer period for machine tool industry, with customer ordering activity generally picking up in the second half of the year. We expect a stronger second half this year as well, supported by a healthy demand pipeline across the both domestic and international market. In addition, our new manufacturing facility is scheduled to commence operation by the end of September, which will significantly enhance our production capacity and enable us to better cater to the strong demand environment. As a result, we expect the second half of FY27 to be particularly robust for the company. Overall, the demand environment today is so strong that we are running at close to our full utilization. Our plant operation at 86% capacity utilization in Q1 FY27. Underscoring the need for the capacity expansion that we had announced earlier, I am pleased to share that our expansion project, which will add the capacity for 10,000 machines annually, is processing as planned. Installation of machinery is well underway. Our operating teams have already been put on place, and we have proactively built up raw material and inventory over the past 9 months to ensure a smooth production ramp-up. We remain on track to commission the new facility by the end of September, following which we will be positioned to cater to strong domestic and international demand, a pipeline while supporting our next phase of growth. Our revenue continued to be well diversified across the end user industries, reflecting the strength of our business model. During the quarter, 37% of revenue came from aerospace and defense, 35% from automotive and auto components, 17% from the general engineering, 6% from electronic manufacturing services. The balance 5% came from other industries. Moving to our order book, we continue to maintain a healthy and diversified order pipeline. As of today, our order book stands at rupees 4,848 crores, providing a good revenue visibility for the coming quarter. The industries-wise order book comprised 38% of order book is from aerospace and defense, 20% from general engineering, 19% from automotive and auto components, 13% from electronic manufacturing services, and 4% from die and molds, and with balance coming from the other sectors. For a detailed update on order inflow during the quarter, you can refer to our investor presentations. On machine sales front, we sold 1,406 machines during Q1 FY27 compared to 1,117 machines in Q1 FY26. The product mix was as followed. Entry-level machine sales stood at 1,349 compared to 994 last year. Mid-range machine sales stood at 33 compared to 104 last year. And high-end machine sales stood at 24 compared to 19 last year. Overall, we have started FY27 on a strong footing with healthy revenue growth, improving profitability, and robust order book. Demand continues to remain encouraging across key sectors, while our upcoming capacity expansion will further strengthen our ability to capitalize on the opportunities ahead. With a strong manufacturing base, continued investment in technology, our partnership with Huron, and a clear focus on supporting India's manufacturing transformation, we remain confident of sustaining our growth momentum while creating a long-term value for all our stakeholders. With that, I would now like to open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Harshit Patel from Equirus Securities. Please proceed with your question.
Thank you very much for the opportunity, sir. Firstly, on your capex, as you mentioned that the additional 10,000 machine capacity will come on stream in September 26. What will be our overall capex outgo for the full year FY27? Because there will be some maintenance capex as well. And just a follow-up to that, all our relevant backward integration, foundry, sheet metal fabrication, machining, all those things, they will also come on board in September 26?
Thank you, Harshit. Let me come back to one by one your questions. So we targeted at close to 450 crores of a capex for this our new capacity over there. And we are until today we are on to same target line. We are on the track absolutely on that. Another your questions about the detailing. So today almost our 80% of machine shop is already the factory has been constructed, machine has been put up. Already we started to partially machining and everything is already started. Only the part of automation that we are going to do it now, and then it will be improve our more and more manufacturabilities over there about the machine shop there. Sheet metal shop, the building is about to finish now, and all the machines we already received. And once the building has been handed over from this day, within a week time and all, our installations and everything is going to start. Parallelly, our paint shop also, the building is getting ready in this week. So basically all the equipment, everything is put into inside and to installation is going to start from this. Okay. Only the foundry part, okay, that is running little late. We are expecting to this foundry to be finished in October there. Okay. So right now the foundry equipments and everything is going to come in September, and we may take at least 1 month additional time to that. But apart from that, assembly building is also ready now. Assembly building is ready, machine shop is ready, sheet metal is ready. Only in foundry, we will have a 1 month to wait over there. So almost you can say that 99% we are on time there.
Understood, sir. Perfect. Sir, secondly, on our working capital position, as you mentioned in your opening remarks, our current inventory levels are slightly elevated because we are planning for the upcoming execution ramp-up from the second half of FY27 onwards. So how this inventory position, along with both receivables and payables, how this metric will look like at the end of FY27? So here I am trying to understand how will our working capital and the operating cash flow generation will look like for the full year.
So basically the last year, Harshit, we started to ramp up the, see today you see that we have close to now 5,000 crore order book. Okay. So we have ramped up the every ever procurement and all since last 9 months there. And with this new facility is coming up, and execution will set right nicely after the new facility. We are expecting to let's say the working capital in the inventory stage is drastically remove, let's say improvement we will see. In terms of a operating cash flow, we are expecting to very positively surprised to be seen there.
Understood, sir. Perfect. Thank you very much for answering my questions. I'll come back in the future.
Thank you, sir. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants in the conference call, please limit your question to 2 per participant. The next question is from the line of Rabindranath Nayak from Nirmal Bang Securities. Please proceed with your question.
Hello. Good evening, sir. Thank you for the opportunity.
Good evening, Ravindraji.
Yeah, thank you, sir. Sir, congratulations on good gross margin. There is a significant growth in the gross margin, despite, very low sales in Suran. But the other figures like that, the staff cost and also the other expenditure and quarter-to-quarter basis has increased. And also whether it is due to the new capacity that we're building, so whether it is relating to that, the interest cost is also has gone up. So you mentioned that with the foreign exchange loss, our EBITDA is around 23%. So I am referring to your past call that we mentioned that we will, whatever may be the realization, 34, 36, or even the realization go to around 30 lakhs. our margin will remain 24-25%. So how will you reconcile all these things to actually to a 23% margin in this quarter? So whether there is some capacity cost we have built in this quarter so that our margins are low. So can you comment on something on this? Thank you. I will come to the next.
Thank you, Ravindra. Thank you, Ravindra. See, Ravindra bhai, basically, if you look at that, our standalone margin has improved very well. Okay, it means we are completely on a cost and everything is nicely been there. Even the, let's say the individually we have a 27% plus, and we always guided to the people to at 25%. Okay. Right now, what we are seeing is the difference are coming basically in Huron. We have made the revenue close to a 35 crore in quarter. Compared to the last year quarter, it was close to 70 crores. We missed this 35 crore additional revenue due to this our new accounting structures and all. We have produced, but we are not able to bill them. But the cost and everything has been loaded there. Okay, so that's how it has been look like. And compared to, let's say, even we have a 35 crores of a material has been transferred from India to there. So that in consolidated revenue, it has been a net off. And that's why this revenue has not been seen to be higher there. Okay, but in terms of a margin, we are absolutely on track. Once the revenue comes in a coming quarters, been booked in a Huron, it will be reestate to all the margin to be there.
Okay. And sir, interest cost has gone up. Whether we are booking because why are not capitalizing the interest for the new capacity that you're going to build?
So basically, we have fully booked into cost over here, and anyhow, this the capacity is going to start in this year. We are going to utilize from September onwards. And partly already we started using the building up of this all our components and all. Okay. Okay. Already we have put to use. There are many things we have put to use there. Okay. And that's how we are able to improve from our third quarter. If I not put to use and if I start everything from October onwards, then I can capture the revenue from next year onwards there. So already we started, so we put to use and then cost has been incurred. So we cannot push into any capitalization over there.
Okay. And if we compare it of like-to-like basis, whether it is right to estimate that around 20 to 25 crores of additional cost we have built in our cost for which the margin is down?
So basically, if you look at that, see the margin, I told you that revenue has not come from Huron at close to 35 crores. That's supposed to come as compared to the last year first quarter. Okay. And if you calculate this margin, we missed the margin of 22 crore. Exactly over the same margin we missed there.
Okay. And sir, one suggestion, because if you give the Huron's, performance on a quarter-to-quarter basis, that would be helpful. Because, instead of, discussing in the conference call, if you can give it explicitly, that would be helpful for the investors to actually analyze the things properly. So that is a suggestion. And last year there was a forex gain that we have not, accounted, because if you could have accounted for that in this quarter, then the YOY the things would be better. Because we have got, 10 crores loss. Last year it was 20 crores of gain per us and the forex tag. So like-to-like basis, it would be, performance would be compared properly. And sir, the new machines that you have, just discussed in the opening remark, is it what type of machine and what is the realization and also what is the market, what is the import currently India is doing on this for this import machine?
So basically, this large size of a machine are coming from the mainly from this Taiwan, Korea are the main supplier of this particular machines. The machines are more than 5 meters range. We have built up this 6 meters, the new first model. Then another machines we have put up right now under development is 8 meter and 10 meters also. Particularly for the heavy engineering, last year India has imported more than 300 machine of this categories there. And value for this machine is close to 3 to 5 crores in between over here. So we have just been developed, and the target industries is right now the railway is also expanding big way there. And we have received some of the orders in this quarter also against this machine for the railway component suppliers over there.
Okay. And is it a 3x machine?
Sorry to interrupt. Rabindra sir, may we request that you return to the
Yes,
question you follow?
Last question. Okay.
Yeah. So Ravindra, this is a 3+1. Yani, this machine is a 5-sided machine, but not an a 5 axis simultaneously there.
Okay. Thank you, sir. Thank you.
Thank you, sir. The next question is from the line of Saif Saurabh Guzar from ICICI Prudential AMC. Please proceed with your question.
Yeah. Good evening, Jadeja sir. So, just one question around the Huron thing which you mentioned at the initial part of the call, right? Regarding one of the machines where I think the approval was pending because of which it is in inventory, right? Is that correct, which I know?
Correct.
So, because comparing it to the last call which you had highlighted, it is about the licenses which I remember, right? Like for each machine, I think the controller has to issue approvals. So, is that approval received now? Is it a timing issue or is it still due even post for this specific machine?
No, particularly is not in a one machine, but specifically all the export license is right now they are taking a longer time there. Okay? So we are in a waiting mode there. Once we will receive the license, it means there is a certainty for the machine to be dispatched, and then only we can able to book this into our revenue to be there. This is the method been a very conservative method been adapted by the local authorities and the local auditors over there. So that we have adapted over here basically. And we are in a very, very strong positions. Our 2 to 3 meeting our management has done with the authority there. And they are very much positive. They are looking to the end user, client and all, and they will clear very soon there.
Got it. That's it from my side.
Yeah.
Thank you, sir. The next question is from the line of Bajrang Bafna from Sunidhi Securities. Please proceed with your question.
Sir, congratulations for decent set of numbers on a standalone. Of course, there is some ambiguity on the Huron side, so I'll be little more specific to get the clarification done from you. So since you already pointed out, I'm just putting in perspective. Earlier we have adopted percentage completion method, and now we are booking revenues on Huron once the machines are dispatched. So since the complete dispatch was not there in this quarter on the Huron side, as compared to what we have exported some material to Huron, we have seen the revenue dip, and if we would have adopted the earlier method, then revenues would have been higher by close to another 30-35 crores, which would have flown to EBITDA, and the comparable EBITDA would have been much better than what it looked like in this quarter. So is my understanding right, sir? To understand?
Absolutely, you understood as perfectly right, and I already stated into all past 2 questions also. So absolutely, let's say if this method has been not set, then my top line which should be 35 crores more, and 22 crores margin should be more there.
Correct. So now, sir, going into Q2 precisely, can we expect, that some dip that we have seen in Q1 in terms of, dispatches of machines, can they pick up in Q2 or we have to wait for the second half? So can we expect some sort of pickup in dispatches of machines in Q2? So Q2
basically we are looking to be, this particular thing has been changed only in the last 3 months. Okay. It started from Q1. Okay. And now we are expecting Q2 is much better. We have a local machine. Those are the machines are going to be prepared and going to dispatch. We are not waiting for the end user certificate also. So we are significantly, we are expecting to Q2 numbers to be improved there first. Okay. Gradually, I'll tell you one thing. These are the long-term, large machines, and the manufacturing times are longer. So the lumpy things are coming up. So third quarter and fourth quarter, we will see the bunch will come. Ultimately, we are producing and keeping there into WIP there. So one day it will go out, and we will see the nice results on a coming quarters to be there.
Okay. So, sir, I'm just trying to conclude it. The earlier practice was that since the lumpiness was not there, so numbers were looking smooth because of percentage completion method.
Absolutely.
Now, few quarters might see more dispatches, few quarters might see lower dispatches on the Huron side. So it is better for us to look at the yearly picture rather than, quarter on quarter EBITDA margins. Is that
absolutely
right?
Absolutely. Machine tool company, we need to see a yearly basis only there.
Okay. And sir, still we stand by with our earlier guidance of close to 25 to 30% growth on top line and maintaining the EBITDA margins in the range of 25%.
Absolutely. We are fully committed. We are on the way, and we have demonstrated. If you look at that, even this situation also, we are close to 23.4% at margin, and growth also is close to 24% at consolidation level also. So we are on track, and we are absolutely going to deliver 25 to 30% as the guideline has been given, and margin also to be maintained there. We are fully confident on that. We'll deliver that.
Thank you, sir, and wish you all the very best. Thank you very much.
Thank you.
Thank you, sir. The next question is from the line of Aniket Jain from Anand Rathi. Please proceed with your question.
Hi, sir. I wanted to check on the EMS market. Is the demand environment improving there? Can we see some good ordering in the couple of quarters that are yet to come in this year? So maybe that's question one for EMS ordering.
Okay. What is the question number 2? Batai do.
Sir, question number 2 is also on the accounting change that you have done. So if I understand correctly, there will be some huge lumpiness in the revenues, basically 30 to 35 crores. We may see 30 crores for Huron in one quarter, and that may increase to 100 crores in next quarter, because eventually the run rate was about 70 crores that was historically done. So doesn't that create a lot of lumpiness in the EBITDA margins also? It can go to probably 30-31% when the revenues are higher and come down to 23-24%. So how to look at the margins, the sustenance of margins then?
So I always say that, Aniket, that first of all, the machine tool company, we are not a quarter to quarter. Okay. But anyhow, we are here. So, and we manufacture the very large machines, and also it will going to happen, and we will see that things. And people will also, you will also able to understand the complete cycle to be there. So that is a part and parcel of the business. So we will see that things basically. Regarding the EMS, we are fully busy right now. It's not converted into a order because all my customers also are developing their own capacity. Many customers are waiting. Now there is a new electronic manufacturing component PLI scheme, and the announcement up to 40,000 crores. So many of customers are waiting, and then they get the clearance. Right now, we are fully more than 200 of our people. Those are working with those our customers and developing each new processes, toolings, the programming, and supporting them. So we are fully equipped to support to them. Once they are ready, we are also ready. And basically, right now, our capacity also will come up. They all are looking to us over here also. That today we are almost 90% utilization levels are there. So, and already we have a big order book in our pipe, and we first like to execute all these things first.
Understood, sir. Very clear. Thank you so much for answering. I'll get back to you.
Thank you, sir. The next question is on the line of Arafat from Daulat Capital. Please proceed with your question.
Yeah, hi, sir. I'm audible?
Hi. Yeah, absolutely.
Yeah, sir. Thanks for taking the question and congrats on strong stand-on performance. So my first question is on your realization. If you look at the realization per machine blended, is come down in FY26 to around 38 lakh from 40-45 lakhs in FY25. And if you look at the number what you discussed in the 1Q FY27, it's further down to 36 lakh rupees. So just want to understand it's mainly due to the, let's say, machinery or the sector or which has drive this lower realization for the 26 and also 1Q FY27?
So basically, see, if you look at that, the last year, the first quarter was 1,100 machines are there.
Mm-hmm.
This year, we have increased the number of machines to close to 1,406. Okay. So the last year, the first quarter average was 34.41. Okay. And this year is close to 34.56. Is almost similar there. Okay. And we will be in a range in coming days because the way number of machines and capacity on a entry level and mid level machines are increasing. So we will be in a range of similar in a coming quarters or 1 or 2 years to be like this.
Okay, got it. Got it. Sir, next question, bookkeeping question. You said the total capex for this 10,000 machine close to 450 crore rupees. So I think if you look at for the 26 capex, I think it's somewhere close to 300 crore rupees. So just want to understand what capex you have done till now in FY26 and what would be your capex for FY27 in terms of numbers.
So in terms of this year, we are going to do close to 200 to 225 crores. Balance of this 150 plus some maintenance capex and all kind of things.
Okay. So can we assume again 300 crore capex for this year as well?
No, it is not going to touch to 300. I told you that 200 to 250 in between.
Okay, fine, sir. Got it. Thanks. That's it for myself.
Thank you, sir. The next question is on the line of Shweta from iThought PMS. Please proceed with your question.
So firstly, a clarification. In the beginning, you said that this quarter's capacity utilization was 86%. Can you tell me what the capacity was for that utilization number?
So basically, it's a 6,000 machine a year.
Okay, because if I was not wrong, earlier for FY26, we said around like 90% utilization. That's why I wanted to confirm that number.
Yes, correct. So the last year, let's say at the end of the year, we built 5,550 machines there.
Okay.
Yes.
Okay, sir. Thank you. My question is, even though the ASP declined this quarter, we saw an improvement in the gross margin. So is that how it is going to be going forward, even as the entry-level machines ramp up with the new capacity?
So that's why I'm telling, let's say this, the gross margin, ultimately with all model mix, I always guided like that. We will be at EBITDA level at 25%. We may sometime go plus, but we have been, business model has been ensured like that. We'll be nearby that.
Okay, sir. Lastly, one structural question. Are you seeing any signs of replacement demand, like machines that were imported like 20 years back or something that are getting swapped with Indian machines now?
Yeah, there is a lot of new demands are coming. Particularly in the last July, we have seen a historically highest order book today now. Every area is demand is coming up. We first time in a local market, local it means is in India, we crossed more than 1,000 machines in 1 month. And specifically, even every industrial area is growing, but particularly the area I'm coming from, let's say Rajkot alone, Jyoti has booked more than 250 machines in July there. So it's a massive demand, and all the now we have been witnessing the people, those have been used our machine in 2000 to 2005, they are replacing, even new capacity being added on, and then many new things are coming there. See, the last year, none of the Indian machine tool company we were having the capacity, so import has surged. Okay, import has increased to now in the last year has reached to 62% of a total India's consumption there.
Okay, sir. Got it.
Thank you, ma'am. The next question is from the line of Saurabh Vyas from Systematics. Please proceed with your question. Mr. Saurabh, your line has been unmuted.
Hello.
Please proceed
Am I
with your
audible?
question.
Hello.
Yes, sir.
Yeah. Hello. Hi, sir. Thanks for the opportunity. So, first question regarding the Huron accounting one. So we, as of now, we took this stance because of the going on investigation in the Huron capacity. I just wanted to understand that if we get this investigation concluded and if this investigation comes into our favor, so going forward in the next year, we will be again going back to the percentage of completion method, or the Huron facility specifically will be accounted as on the basis of deliveries.
No, basically until that is now, see, the principle of account is no more connectivity with the today our investigation and all. So basically the uncertainty is happening due to geopolitical situation, and end user certificate is an important parameter there. Previously it was not that important there. Now they consider this is the uncertainty of the delivery. So once that, until that certainty will not be come over there, they will not book. If I get let's say the end user certificate within 3 months of my order, I can able to book a POCM there also.
Got it. And just one more question on the new capex. Basically, we will be adding around 10,000 of machine capacity in the coming quarter by September. What number of machines that are we looking from this incremental capacity to be booked by FY27?
So what I said that we will be grown up by 25 to 30%. This year. Okay, that's already we have estimated and we have been given the guideline there. So you can make calculation based on that, because right now, last year we have built almost 90% of our capacity. So you can say that we are going to cross more than 8,000 machines this year.
8,000 machines. Perfect. All right, sir. Thank you so much. Thank you.
Thank you, sir. The next question is from the line of Prerak Gandhi from Sovilio Investment Managers LLP. Please proceed with your question.
Yes. Hello, sir. Thank you for taking this question, and thank you for addressing all the questions very clearly. I just had one question on the parent subsidiary. First, can you just explain me the rationale behind changing the accounting policy? And secondly, the total loss that the subsidiary has recorded, approximately of 30 crores. Can you just give us the bifurcation of how much that loss has occurred due to operational and probably delay in sales issues, and how much is purely due to accounting purposes?
So basically, I'll tell you that, let's say this year, the last year, first quarter, we did close to 7 million turnover. This year also, we have manufactured the machine up to 6.5, but we are able to build up to 3 million there. So additional 35 crore revenue we have missed, but all the cost has been incurred there. Okay. That is the difference are being seen into a 30 crores of a gap there.
Okay. And so the rationale behind changing the accounting policy?
See, the rationale behind the accounting policy is that today, now these end user certificates, okay, is getting too much late there. Okay. And with this investigation has been started. So the auditor has taken a very conservative steps, and based on the accounting standard and French gap over there, any percentage of completion method, if any of your dispatches, if there is uncertainties are there, you are not able to book those revenues basically. And our uncertainties means that you have received the order, even you have received the funds also, but your government authorities, they will not clear, you are not able to dispatch. So you are not able to book this revenue to be there.
Okay. So just one clarification. So we are just awaiting the certification and, completion of this investigation. Once these two things get sorted out, we'll just...
So both things are different. You remember one thing. Investigation is a different parameter and end user certificates are different there.
Okay.
And so end user certification and dual use end user certification, we need to take any exports from Huron to there. Not today, even in past also. Okay. But previously we used to get the certificates very fast. Today the timeline has increased there basically.
So any reason for the timeline to stretch?
Geopolitical situation. Okay. Those guys are there is a defense ministry. They check every individual user. Let's say today, if I receive the machine order from HL, okay, and if I have to export, let's say give machines to HL, I need, and I'm using a Siemens controller. So Siemens has to take this permission for HL from German defense government there, okay, from government defense there. Okay. They will give the clearance based on the users of these machines. Okay. So every time they ask something, we go to our customers. Let's say we are right now waiting for many of our Chinese customers and Turkish customers to getting the clearance over there. Okay. So once the authority asks something questions, we have to go again to that customers and getting the documents and going back. So this is how the process has been increased there.
Okay. That is quite insightful, sir. Thanks a lot. Just one, if I can squeeze one more thing. On the investigation side, can you give any timeline as to when, this entire thing will get sorted out?
We will be normalize these things basically. I don't think so. We are not seeing very near future to be, let's say, they are not, geopolitical situation is such that we don't see that it is been finished in 1 month or 2 months like that. Okay. But we are sure the way authorities are been responding to us about the licensing and all, our team and went and meet them. Definitely they are going to improve the timeline over there.
Got it. Thank you so much. That is very insightful. All the best.
Yeah.
Thank you, sir. The next question is from the line of Aniket Jain from Anand Rathi. Please proceed with your question.
Hi, thank you for taking my question again. I wanted to check whether these export licenses are required when we are manufacturing the machines in India and exporting from India as well, or is it just the Huron specific issue?
No, it's every machine tool company. Let's say today I'm in India, and whatever the machines I'm manufacturing, the machines are simultaneously 5-axis, and if I have to supply to any of the customers, okay, the license, let's say right now, I'm buying this controller from Siemens. If tomorrow I buy a controller from Fanuc or a Siemens anywhere, so they have to obtain this license from their authority to be there.
Understood.
So right now, Huron is in Europe, so they are making a machine, so they have to take there.
Okay. So
I'm buying a controller from Siemens, so Siemens is taking this basically in behalf of us there.
Understood, sir. Got it. This was the question.
Thank you, sir. The next question is from the line of Abhishek Jain from Chris PMS. Please proceed with your question.
Thanks for opportunity, sir. Sir, as you mentioned that you are not able to book around 35 crore revenue in this quarter. Otherwise, revenue to be around 65 crore.
Sorry to interrupt, Abhishek, sir. May we request? Sorry to interrupt, Abhishek, sir. Your voice is very low.
Hello, are you able to hear me now?
Yeah, now it's correct.
Yes, sir.
Sir, as you mentioned that you are not able to book around 35 crores revenue in this quarter. Otherwise, revenue to be around 65 crores on the Huron. So just wanted to understand what's your full year guidance for the revenue of Huron in FY27, and what EBITDA margin can we expect from this year?
Okay. So basically, that's the correct question now. So, Huron, we are expecting to close to 300 to 325 crore of revenue this full year.
And on the margin side, what margin we can make on the Huron in this year?
So basically at EBITDA level, we will reach at Huron level at close to 8 to 10%.
8 to 10%.
Yeah.
Okay, sir. And my next question on the CNC controller, as you are developing your own CNC controller, so just wanted to understand what is the progress right now and when we can expect commercial deployment of CNC controller.
So basically, we are manufacturing, let's say, designing and developing drives, motors, CNC. Today our HMI is ready, and I think commercialization will happen in the next 2 years' time.
So when can we expect the capex for this commercial production of the CNC controller?
So right now we have already applied for the PLI, okay, and we are eligible, and we have been applied there, and we already now plans are ready. Once we will get the clearance, we will make a plan to commence there.
And what would be the incentives for the PLI, sir, in terms of the percentage?
So today, in terms of a capital subsidy, is close to 25% from the central government, and similar, whatever the central governments are giving is the same amount matched by the state government. So you can consider close to 50% there.
Got it, sir. And my last question on that customer qualification program, which you are running with the semiconductors and with the Apples. So just wanted to understand what is the progress over there.
So already many customers we have been qualified, and many we are designing and developing the processes for them. Yeah, so it is going greatly. In the beginning also I said that we have more than 100, 200 people are connected with them and developing the many more products for them basically.
Okay, sir. Thank you, sir. That's all from my side.
Thank you.
Thank you, sir. The next question is from the line of Kamlesh from Lotus Asset Managers. Please proceed with your question.
Yeah, thanks for the opportunity, sir. So, I'm apologizing for the question. So, what processes we are taking up, in terms of improving our HR, then our financial operations, particularly CFO side, and our audit system, because you may be looking at a lot of these things circulating on the media, social media as well. So what steps we are taking to improve our systems, internal systems? Because given the fact that we are in such a good position and we are doing remarkably well, 10% market share in terms of CNC market. So what, internally, what we are doing better, on improving the processes? I ideally believe that you should change the auditor. These steps should be taken because it will further improve our visibility in the investor community, because these are literally dragging our overall perception.
So first of all, Kamlesh ji, I will tell you one thing. The improvement is always a continuous improvement. Okay, and this is the ongoing process all the time. Every company is been growing from small to mid size to bigger size, and they evaluating and let's say improving every day by day there. Okay, so you will look at with your perception, and we are also taking into account on this area. But we are very much, let's say, always in improvement side in terms of the quality, in terms of the processes. We are a ISO 9000 company, is a fully, and if we are not in a good in terms of this HR best practices and all this, so we cannot have a work with the world largest and biggest customers to be there. They will not qualify to us there. If you look at that, our customer base and all, if our processes are not into place, none of the customers, but your suggestion we will take into consideration, and we will see that where we can have a always we are improving and will further improve to be more there.
Yeah, I appreciate that, sir. And secondly, and we really look forward to that because despite having such a strong performance, we continue to hear like a lot of complaints on that front.
Kamlesh bhai, without a people, performance never comes. Understand that.
Yeah, I do appreciate that.
Okay, without a good quality work of the people, we should not able to reach on this position there.
Great, sir. And sir, on the Huron side, you told that we would be doing 300 odd crore in this year and 10 to 11% margin. So I believe that is on the Huron side only. And
I said 8 to 10 up, 10 to 12 करके बड़ा मत दो. I said
no,
sir. Very clear.
No, I am trying to understand that is only on the Huron standalone basis. So whatever components which we are sending from India, so that would be having their own 20-25% margin built in that.
Absolutely.
So for a company as a whole, on 300 crore, would we be making like say 25-30% margin because the machines in Huron are So 10 odd percent is primarily on the Huron standalone basis.
I said that Huron. Someone has asked to Huron performance, so I said at Huron level there.
Okay. And so secondly, like on the percentage of completion method. So when I go to your annual report for FY25, we used to have been following that practice in accounting treatment as well, revenue recognition. So I'm really confused that whether it was adopted in FY26 itself or because it has been the practice in the previous year as well. So I'm really confused on that part, whether we have followed now or it was there in earlier years as well. So
Kamlesh bhai, this practice is in Huron since last 20 years.
Yeah.
Okay. And that is still exists. Only one condition has been added. Okay. And that is I'm telling you that only once uncertainty is back to the end user certificate. Okay. Once the end user certificate given by the government, we will add on to a POCM there. So it will be continued there. It is not been closed. Okay. And this has not been changed anything. It is been modified. The accounting team has been modified there.
Okay, great, sir. Thanks a lot.
Okay.
Thank you, sir. The next question is on the line of Sanjay from Bastion Research. Please proceed with your question.
Thank you so much, sir, for the opportunity. Sir, I wanted to understand that, what are we expected since our new facility is going live in Q2 FY27. So Q1 FY27 should see the jump in order intake, while sequentially from Q4 FY26 to Q1 FY26, when we see the order intake fell by 15%. So can you please throw some light on that? How should we view this?
So basically, we are already having a stretch order book. We have a very large order book compared to our execution today. And every quarter, let's say today, if you see that in the last couple of quarters, we are consciously, let's say what we are dispatching, we are increasing more than that. Okay. Even this year, this quarter also, we have a close to 510 crores is a dispatch, and we have 600 crores is a order book there. And our customer also look at that once our execution capability will increase, we can book furthermore then. So definitely we will see in the last quarter to be more order intake, because that will be our customers also become very confident. Then only they will place us to order on time deliveries to be there.
Okay. So my another question would be, as you said that Q1 to Q1 should not be comparison, I understand that, but on a sequential basis, we are comparable, and the capacity is already being going live on, building up. So the cost on that front is already building up, right? But when we see on sequential basis, our margin are been down by 320 basis point. So this reflects some of the point you said that because of Huron 35 crores. So that's attributed primarily to Huron, otherwise our margin would intact on that basis. Is that understanding right?
Absolutely. You can see let's say on the same standalone business, I have a 27.5% margin to be there in this quarter itself.
Okay, sir. Thank you so much. I will get back. Thank you.
Thank you, sir. The next question is from the line of Amit from Clear Blue Capital. Please proceed with your question.
Hi, am I audible?
Yeah.
Yes, sir.
Just trying to understand this end user certificate. It is only for 5-axis, right?
Absolutely.
So it is not
5-axis also. There is many conditions are there. Let's say first is the 5-axis simultaneously, or any let's say there are many long guidelines by EU and all. Certain precision also is a part of that.
So none of our standalone sales require any kind of end user certificate, right?
Standalone in India?
Let's say Jyoti sales to some of Jyoti.
We also required.
Okay. So is there some kind of there also is there some lag in the revenue recognition?
No. Here, no. We have all this in India particularly. We are having India and Germany. We have a very good repo systems and all. So we are able to get it very fast over there.
Understood. Thanks. That was my question.
Yeah.
Thank you, sir. The next question is from the line of Ravindranath Nayak from Nirmal Bang Securities. Please proceed with your question.
Thank you, sir. Thank you for the opportunity. Sir, I actually, in the plant visit, you mentioned that the 200 crores of order is expected for MBDA. What is the status of that now?
So already out of that few orders we have received in this quarter. And many are in the coming quarters we are expecting that.
Okay. And sir, MBDA is also expanding here in with L&T. They have already set up the capacity in Coimbatore. So whether we have actually the opportunity there to market our product?
Absolutely. Many European companies are coming in India, and we are all in a preferred supplier to their list. Not only this one. Many more are coming in aerospace and defense area to be there.
Okay. And sir, again, sir, the BFW is already set up this 10,000 machine capacity in Hosur. What is the how the competitive scenario is going to shape up? Because we are also developing at the same time. So can you please throw some light on that? What is the competitive scenario is going to come up?
Right now, Ravindraji, always every business, there is a competition. And we are coming up here with we have a very fight and tough competition always. Okay. So, yeah, it is a part and parcel of the life.
Okay. And sir, they are also manufacturing the 3X machines in this new facility, or they are manufacturing something other?
I cannot tell about the strategy of my competitors there.
Okay, sir. Thank you very much. Thank you.
Thank you, sir. The next question is from the line of Simran Kumari from Narnolia Financial Services Limited. Please proceed with your question.
Hi, good evening. I have two questions.
Sorry to interrupt, Simran ma'am. Your voice is very low. Can you speak little louder?
Hello?
Yeah.
Yes, ma'am. Please proceed with your question.
Yeah. Good evening, sir. Thank you for the opportunity. I have two questions. First one is on debt outlook. Could you just provide an outlook for the debt for the fiscal year FY27 and walk us through the drivers behind the increment in the interest expense during the quarter? And the second question is regarding the order book. What is the current visibility for the order book for the current fiscal? Those are my two questions.
So in terms of right now we are in a debt situation. We are very much comfortable situation that we are not seeing further debt to be increased from this year. Because already we have taken term loans and everything to be there. Once, let's say, any further capex in next future, we will think over there. Okay, and still, okay, our balance sheets are allowing us to go up to, and we have made a discipline parameter inside that we will not grow more than, let's say, our debt should be 1:2 to EBITDA level there. And well, we are within that limits and we will not going to increase to be there. So this year, we are in the similar level to be there. It is not going to increase there. What was your second question? I missed that.
Sir, second question is regarding the order book visibility.
So order book, let's say we are very much clear that this year, the first quarter we took almost 600 crores. And we are expecting to finish this entire year in between 2,500 to 3,000 crores there.
Okay, thank you so much.
Thank you, ma'am. The next question is on the line of Jay Shah from Genuity Capital. Please proceed with your question.
Hello, sir. Good evening and congratulations for a good set. Sir, I just wanted to ask on Huron, basically just one question. You said that around 325 crores of revenue, and if I'm not wrong, our capacity there is 240 machines. So what would be approximately the number of machines for this revenue, if you can say? And you said around 8 to 10% margins. But would it be PAT positive this year? Do you think so?
Yeah. So first of all, 8 to 10% EBITDA, yes, we are positive there. Okay. In terms of a PAT passage there. Okay. Second, in terms of let's say, the 240 machine is a capacity based on the model mix. Today, what we are receiving the orders is all are large machines. The machine value is more than 1 million euro to be there. And that's why this manufacturing time and everything is longer there. So, for a larger machine, in our capacity, we are able to execute in terms of a value-wise close to 75 million euro there. It's close to 750 crores there.
750 is the full capacity realization.
Full capacity utilization level.
Okay, so eventually we will reach the
that we have just expanded last year in December. Okay, November, December we add on the capacity. So we have a now capacity up to 750 crores to be there.
Understood. And just sir, last question to understand this license and end user certificate better. So is it that even from France, if you have to locally sell in the European Union, like to Germany or Spain, Portugal, even there do you need certificate, or this is only to export out of European?
No, out of European Union. I don't need a license there for the Germany, for the Italy, for the Spain.
Okay, understood, sir. Understood. And this last question, sir, you said, that a lot of replacement, to one of the previous participants, a lot of replacement demand and a lot of local demand is also coming in. So if I have to, I mean, I've visited Rajkot a couple of times, so just trying to connect these two things, is it that you are finding a lot of, component guys who are now getting into aerospace or precision engineering, even at a local level, tier 1, tier 2 suppliers? Are they also upgrading? Is it fair to say that they're upgrading to a certain level of machinery, and that's why in the future our realizations can go up? Because, it feels that now, since with the new capacity, Jyoti can take a lot of import share. Because you said 62% is import as on today. So are these guys also upgrading because India is seeing so much manufacturing, and like you said, all Europeans are coming here. So people would need some better capacity, better capability machinery, right? And if Jyoti can deliver, would our realizations go up with time because people have to also upgrade if they have to work with Europeans and US companies?
Absolutely. You see, the face is changing the entire India there. India is moving more and more. The maturities are coming. Is all the manufacturing company is expanding their core competencies to produce the very high precision component there. Okay. Recently, we have supplied some machines in our town, and those guys are supplying parts to Airbus or Dassault and to these programs also. And based on that, all these Indian manufacturing capabilities are increasing. Second, people are looking more and more on automation on a machine there. Okay. So that's another area is opening up, and we are forefront to substitute to import substitution. Yes, in coming days we are looking to on a higher and higher manufacturing, the larger machines to be there basically, on a high tech machines to be there.
Understood. So, sir, just to end this, when you say high tech machines or higher range machines, is it basically that your customers are also moving from components to a system supplier and hence they also need more advanced machineries? Or is it that they are getting into more technical components and that's why they need advanced machines, or it is a mix of both?
All mixed. Basically, they are moving their own high value chain basically. India's manufacturing is going more and more on a high value manufacturing to be there. And that's why the precisions are required more and more there.
Understood. And this is all what coming from China, Taiwan, Korea, the business that India is now getting. Would it be fair to say?
Yes. Yeah, absolutely. It's in China plus one is a real things are coming up. Even I'll tell you a simple example. Earlier our Indian Railway, what the speed was there and what are the now Vande Bharat and all the new trains are coming. So once we need to produce the high-speed trains and all, you need a higher precision components and more technology-driven parts to be there. So those are the things are everywhere is improving there basically.
Understood. So this NX machine that you put in the presentation, sir, what is the use in Indian Railways? If you could just spend 1 minute on that.
To manufacture the bogie.
Okay.
Wagon bogies. Yeah.
Okay. Understood. Okay. Thank you so much, sir, and all the best, sir.
Thank you. Thank you very much.
Thank you, sir. The next question is from the line of Dipesh Kashyap from Invesco MF. Please proceed with your question.
Yeah, hi. Hi, sir. Can you hear me?
Hi, Dipesh. Yeah, Dipesh.
Hi, sir. Hi. Sir, just one more question on Huron thing. Sir, I think last quarter, we reversed around 67 crore of revenue from Huron, and this quarter we are talking about 35 crore. So total around...
It's not reversed. This quarter is not reversed.
It is not recognized. So almost 100 crore of revenue which has to be recognized, right? So I just wanted to know, like how many machines are we talking about in this number, and is this a single order or these are multiple orders?
It's a multiple order in around 7 to 8 machines.
7 to 8 machines, multiple orders. So there's a different time in like when you have applied for the license. So will it all come in a single quarter, single month, or it will like be spread out? How do you think?
No. The ones they will clear, I think they will clear everything there.
Okay, so the entire thing may happen like in a single time, in a single...
Yeah.
Okay. But generally, I think you said like whenever you're near completion to the machine, right? 2-3 months before that, you apply for the license. So
earlier it was our practice. Yeah. Now we will start from there first now. Already we have received some of the orders in this quarter. We already apply for that.
Okay. But this is typically to a particular geography that is taking time from EU, or it is like anywhere out of EU that is taking time, sir?
Everywhere. See, basically, particularly our customers are all into China, Turkey. So these are all our sensitive areas, basically, today's timeline.
Okay. Okay, got it. Yeah. And so, what is the debt level right now? I think last year we closed at around 700 odd crore net debt levels. So with the inventory building up, like still, how is the debt level right now?
So today our March and today's level is almost same.
Okay. So we are still confident that the OCF generation that we talked about in the last quarter, that will continue for this year also.
Absolutely. We will build up a good OCF this year.
So 220 crore of CapEx you talked about. Like you said that will be at similar level. So you expect to generate a similar OCF kind of a number?
Yeah, basically this year we are expecting close to a 50% of a EBITDA level there.
50% of EBITDA conversion. Okay, got it. Thank you so much, sir. Thank you for your time.
Thank you.
Thank you, sir. The next question is from the line of Saurabh Vyas from Systematics. Please proceed with your question. Mr. Saurabh, your line has been unmuted. Please proceed with your question.
Am I audible now?
Yes, sir.
Yeah, Saurabh.
Yeah, just one last question. Just wanted to understand that in case the entire investigation that is going on in the Huron, would there be any going forward in the coming quarters if it does not get concluded? Is there any impairment loss we supposed to be booking by end of FY27 in case if this gets dragged along by at least Q4 of FY27? Yeah.
Not at all.
Hello?
Not at all.
Not at all. Okay. Thank you, sir.
Thank you, sir. Ladies and gentlemen, in the interest of time, that was the last question for today. I would now like to hand the conference over to management for closing comments.
Thank you all of you for joining us today. I hope I have addressed all your questions. We remain committed to keeping the investment community informed with the regular updates on any development in the company. For any further information or queries, please feel free to reach out to us or SGA, our investor relation advisor. Even I'm inviting all of you, all this expansion and everything is going on. Come over here, witness, see how we are growing, and welcome to all of you over here. Thank you very much for joining in this call.
Thank you, sir. On behalf of Anand Rathi, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines. Thank you.